Hola guys, ¿qué paso? What's going on? This is Hala Pablo. Thank you for tuning in. Let's look at Bitcoin. All right, I've got a point and figure chart up this morning. Point and figure chart. So the main thing about point and figures or PNFs are that they totally do away with any kind of market noise tied down to the essence of time that's in relation to the essence of time. So, and this is how you could fit the entire life cycle of Bitcoin on a 1 hour point and figure chart. See, this is 2009 all the way to today. Okay. And it's good because it gives me just an interstellar view of the pattern of what Bitcoin has done since its inception, since its birth of being publicly traded. And just by looking at it, just a cursory glance of it, I am able to see some distinct Wyckoff features just jump out at me. For example, let me show you what I'm looking at. For example, this area here, we could call this the primary supply. And then this area up here, we'll call this the buying climax area. This area down here, obviously, the automatic rally, secondary test, and we'll call this area for now the sign of weakness since we went down beneath the AR. And then here, this area, we don't really know what's going to happen here because this is where we currently are. This is what's relevant to today. We're going to call this area just an upthrust because we did make an all-time high back in March, right? This is where we hit the 73 or 74, whatever it was. So that was the all-time high. So this technically is an upthrust. But since then, we've had a series of lower highs and lower lows on expanding waves. So that's not very good, but we'll talk about that in a few minutes. Now, from the bare bones skeleton of this schematic, we can go ahead and delineate support and resistance lines. Horizontal line, we'll do one from the buying climax. That'll be our trading range resistance. And then from our automatic rally point, that'll be our support line. And then from between the automatic rally and the buying climax, we can kind of get a loose 0.5 fib line, or the trading range midpoint puts it around 48 grand. Okay, so we'll say 48,000 is midpoint for this range. Here, let me get this out of the way so it doesn't block us. So 48,000. So we'll make this somewhere in here, just like midpoint. Midpoint's really, really important. A lot of traders don't use midpoint. I like to use it because it's key junctures, and you can really get a bias of a Wyckoff cycle. We have two complete cycles here that have already. I'm just going to extend this out a little bit more. That have already come since the initial PSY. We're just going to go off this. I know there's some activity down here between 2009 and 2020, but not a lot. This around 2020 is really when institutional investors and informed interests, professional deep pocket interests, really began to say, oh crap, what is this thing, Bitcoin, that we've been sleeping on? And they jumped into the game. So we'll take that. We'll take the primary supply starting from that time period back in June of 21. And then it went into the first full Wyckoffian cycle with the buying climax. We'll make this area here. See, we had this triple top. Here would be the UTAD, and then the LPSY here for this one. And then here would be the UTAD for the secondary test for the second cycle. Now this is macro, and then this here would be the LPSY for that cycle. And then so far we've come up and we've topped out at the current 73,000, and that's our upthrust area. And then we've had a series of lower highs since then, as we seem to be retesting trading range resistance, and where we currently sit now. Now, this has been going on all summer. It's a lateral consolidation. However, it's on an expanding kind of wedge-like pattern. Not, some people say it's a bull flag. I think it's more like it is a flag technically, but what I've noticed obviously is the expanding series of the wedge of the impulse waves inside of this structure. When you have expanding waves like this, it's usually a sign of distribution because informed interests are selling. That's what these are. This isn't retail selling. These drop-offs here, these down waves here, each one getting longer and longer. These are informed interests who have bought down here, starting to sell at these peaks. We've had 1, 2, 3, 4 times it's hit this micro trend resistance line here, and we've had sell-offs, and we just can't seem to prevail over the first upthrust here, which is the all-time high. So normally, if they're going to mark up from here and have another proper bull cycle and continue on a bull cycle, then normally what you see is the opposite. You see the waves within the consolidation range beginning to constrict and get narrower and narrower and narrower. See how these are getting smaller and smaller here. Started off big, but they're getting narrower, and then they had a spring before this terminal shakeout. This is an inverted U. This is basically the same principle of a UTAD, just in reverse. So this would be a bear trap here, whereas these are bull traps, and then it pumps up. But before that spring or before that terminal shakeout, the waves are getting smaller and smaller and smaller. Now here you see the waves are expanding, getting bigger and bigger and bigger. This is because this is talking about, this is forecasting a distribution because of the buying and selling is expanding. Look at this wave here. Expanded. That's how you know. Seeing the same thing we could say here. This one was bigger. This one's even bigger. This goes back up. And so what we need to be looking at here is not so much of it retracing right now back to midpoint, because you see what happens is for this Elliott wave up, this 1, 2, well, we'll say 1, 2, 1, 2, 3, 4, 5, make that a truncated 5. Market makers usually don't buy after the 4. They're usually selling to the 4, and then the 5 wave, this last peak that goes up into the UTAD area, these are FOMO rallies. These are rallies where informed interests can unload their positions from having bought down here in the 2, in the early 1. Now the super informed interests start here, market makers, and then they also buy here in the 3 wave. Then they begin selling off here. But some of them hold all the way up to the 5 wave, and that's when they begin selling into the 5 wave. Retail buys the 5 wave, informed interest sells the 5 wave, and then here they're taking profit. So this is basically everyone taking profit. Informed interest taking profit, and then bag holders from the 5 wave are selling, and that's what causes this the Elliott wave on the way down. 1, 2, 3, 4, 5 on the way down, just inversed. So when we see the same thing here, informed interest spot here, 1, 2, 3, 4, 5, which culminated in the UTAD that made this secondary test, and then this whole area here on the way back down the mountain, I call it, down the side of the mountain, they're all taking profit from where they bought here. Informed interests sell up here, but then others who foolishly bought the 5 wave this is their positions being capitulated, is what marks the waves down. And so, all right, guys, so now let's bring this home. So now we had this impulse wave, 1, 2, 3, 4, 5. Okay, so informed interest bought down here at the sign of weakness back in March when Bitcoin was $15,000, $16,000, $17,000, and many of them have held, and they're still holding. Some of them are selling, and that's what causes these expanding waves coming down. This is institutional order flow selling into the pump. Now, what could happen is you see at the end of these tops, usually there's an all-time, there's a high that comes in, which is the all-time high for that period. This would be the first cycle, the second cycle, and the third cycle since 2020. Remember, we're not going to count these cycles down here. So usually right at the end of this cycle, before the big sell-off, they have one final hurrah, and then comes the bleed out. And so that could very well happen on this one as well, especially with the impending election. If Trump were to get in, they've been talking about a lot of pro-crypto stance. So if Trump gets elected, I imagine that the market makers are going to use that bit of news as a grand catalyst to pump the price to get that final UTAD. And they could pump it 10, 15%. And you'll know that it's a UTAD pump because the volume it'll be on low volume. The supply and demand will be comparatively low than to what it had been during this consolidation period. So if you see a pump right towards the end, like say November or in like December even, if we're still up here consolidating, because we've got it's just a few months away, then just beware that you could be buying into a UTAD, just like traders did during these periods. I remember this one here. I remember this back in November of 21. See, people who bought this wave at the time, and even this wave back in January of 21, were thinking the same thing that people think today. Bitcoin's going to go up. Look, it hit $64,000, $63,000. They were also thinking $100,000 Bitcoin back in January of 21. They were also thinking $200,000 Bitcoin up to $1 million, just nonstop moon boys back in November of 21. And look what happened. It's because you got to pay the piper. At some point, the levee breaks, and the market makers, the deep pocket, the institutional investors, the order flow hedge fund operators need to take profit. They need to take their liquidity so that they can buy at the bottom of the new cycle and start the game all over again. It's the cat and mouse game, the frog and the scorpion. And the same thing is going to happen here. This is completely unanswered for profit here. These are deep-seated investors who have bought in. Many of them have not sold out completely, but they will. They're just waiting for an opportunity. What better opportunity than to pump Bitcoin on the heels of good news, as far as like Donald Trump or whoever? There's so much uncertainty right now, but there are those that have been vocally pro-crypto, like Trump. So. Just saying, Trump gets elected and Bitcoin and everything starts flying, be very, very, very careful. You could be getting set up for a trap. So you buy up here, the strong hands sell, and at the end of the UTAD, all you have are weak hands holding Bitcoin, and weak hands are not strong enough. Retail, aka retail, are the only ones holding Bitcoin, noobs. Who bought the top, they're not strong. Their weak hands are not strong enough to keep Bitcoin up, and so it falls. Okay, and so that's what causes the price to fall. So, and then they'll recapitulate the same. Now, how far down will fall, we don't know, but we can reasonably. I'm going to remove the drawing. We could reasonably assume at least back to $49,000, $50,000 Bitcoin. That would be midpoint. But proper retracement can retrace anywhere between 50% and 70%. So just to give you an idea, let's not even say that there's a UTAD. Let's just say that we have a macro retracement just from the all-time high. 50%, which is conservative, will bring us down to $36,000. 70% can bring us down to about 20 grand. So, and then that's the area where we could see the previous low remitigated. So a UTAD would look something like this. If they do it a UTAD, it would be like that. And then they would come down. They would find support somewhere around midpoint right here. Some would buy here thinking that we're going to bounce up. And then what happens is, like here, we go back down to retest support, the support line. It may not happen. We may rally from there and start a whole new bull cycle. I don't know. Nobody knows. We don't have crystal balls. But if we do, then that would come in that would jibe with remitigating these low points like you see over and over again in these cycles, these remitigation points here where the prior lows are retested. So if it comes down there, it doesn't mean it has to go all the way down to 15,000, but it could. It probably won't. Maybe like low 20s. It's possible. It's possible, guys. All I'm saying is this is possible. They thought it would never come down from here. They thought that I remember trading Bitcoin back in November of 2021. I was in Corpus Christi when this happened. I was trading it. I was in Corpus Christi, and I remember when it crashed, when the market sold off. I got a text from my brother-in-law because I was on the beach. I didn't have my phone. I came back to the hotel room. I was like, oh, crap. And so what happened was this thing fell, and it fell steep. Now, do you really think that in November of 21, a noob who just bought Bitcoin at $65,000 because it sold off at what, 67 or something like that? You really think that they would think, if you were to tell them in less than a year, Bitcoin would be worth $15,000? No, probably not. I mean, now I was talking about it and people just laughed at me. I said, hey, man, you don't discount these Wyckoff cycles. I mean, you got to pay the piper. And, it's the same thing now. People who have bought at 73,000, you think they're really thinking that there's no way that Bitcoin can go back down to 30,000. There's no way Bitcoin can go down to $25,000. It's possible, guys. You laugh at me all you want, but, a year from now, or less even, depending on how quickly this dumps, maybe hopefully you'll come back to this video and learn something. So I want to show you something else before I go. I don't want to make this too long. I just want to show you some of the things. Point and figure charts are good to use with like pivot, with like a super trend pivot. So if I go, here's a pivot point indicator here, and this is on the macro. You see it has the bear and the bull pivots. Now, we have one pivot here starting. Now these kick off the macro retracements at the UTAD. So here's the UTAD from April of 21. Here's the UTAD from November of 21. And we see there's only been 1, 2, and then if we're to believe this, 3. What this is saying, if this continues to retrace and these waves continue to grow, then this is going to become more and more prominent. This bear pivot on the super trend is going to become established just like these did. And then we could see the clear potential of another macro bear market coming in after these series, even before or after, whether or not there's a UTAD involved in this one. One thing is for certain is they need to take profit. Someone has to take profit from all of this supply they're holding here. Now, they're not going to pump this up to $300,000, $200,000 without taking significant profit first. No significant profit has been taken since the lows here back in November when Bitcoin was at 15,000. You see, there's been no profit taking. There's been little corrective waves, but no substantial profit areas. Nothing that resembles a macro bear market. Okay, so it's inevitable. It's coming. We just don't know when, and we don't know how far it's going to drop, as far as like 50% to 70%. This one, from this UTAD down to here, this first one was 54%, the one back in May of 21. All right, the one that I was just telling you about when I was in Corpus that dropped all the way down to $15,000 from 64,000, that was a 76%, give or take, retracement. So first one's 50, we'll just say 70. So let's say 60 average. Where would 60% take us? Even if we don't have a UTAD and we just distribute from the all-time high, let's just say the all-time high was 72. Where does 60% take us? How deep? How deep does 60% take us? $28,000. Guys, it's possible. It's possible. Be smart. Be prepared for any kind of scenario. Look at the best results as far as of what could happen if it goes up or goes down. How much you can gain going up, or how much you can gain going down. Be cognizant of both options, and be smart. That's how I've survived. That's how I've been trading since 2017, pretty much full time. So I have had a construction company and a car dealership. I sold them both, so I could just trade crypto full time. So that's what I do, and that's how I've survived, and I could do this, and I don't need sponsors or anything. So if you gained anything out of this video, learn how to learn pattern recognition. Learn about these patterns. You see these overarching patterns time and time again, repeating itself, not just in like macro format, but in micro format, because they're fractal. See, like even here's a PSY. Here's a buying climax. Here's the automatic rally. Here's a secondary test. Here's a sign of weakness. Here's the up thrust, and it's distributed here. Now this could be the LPS or the LPSY, depending on which way we go. But we see this micro format of what I drew out on the macro. It repeats itself over and over and over again. Whether it be distributional, we'll see this would be a textbook Wyckoff distribution, or if it were an accumulation, it would be reverse. So if you familiarize, there's only 4 charts to familiarize yourself with, 4 overarching patterns: accumulation, reaccumulation, distribution, redistribution, and then the Elliott waves, which make them up, which they're consisted of on the inside. If you learn Elliott wave and Wyckoff and just familiarize yourself with these patterns and learn how to identify price action at key junctures, there's only really 3 key junctures. There's supply and demand, trading range support, trading range resistance, and the 0.5 Fibonacci point, midline. And that's it. That's it. If you could familiarize yourself with those, I'm telling you, it'll really, really help you get a good sentiment for reading these. And you won't need 1,000 indicators, okay? You won't need to, the professional traders, the pit traders, the hedge fund operators, the banks, they don't use indicators. They may use, I don't know, like the 21 EMA or the stochastic, or maybe a VWAP line or something like that. But they're using primarily pattern recognition. They're using price action and volume spread analysis. So learn how to trade the right way. Learn how to identify a chart the right way, and it'll really help you out. It'll be very, very lucrative, and it'll be a very good investment for you. So hopefully these videos kind of give you a taste of it, of what it looks like. And so anyway, if you got anything out of that, thumbs up, subscription, or not, I don't care. It's nice though to get some kind of feedback. So anyway, let me let you go. This has gone on, and I got stuff to do, and I'll talk to you guys later. Be safe. Not financial advice. Let me hear from you in the comments. All right, guys. Adios. Bye-bye. Take care. Bye.